rolling into the middle of the trading day on Wall Street, and it's time for a fresh snapshot. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring some clarity to the chaos in these markets. Since the last hour, the story has shifted from pure macro back toward stock-specific action, especially in tech and in policy-sensitive names. The standout new headline is ServiceNow. According to reporting from MarketWatch's Christine G., ServiceNow is buying cybersecurity firm Armis for about $775 billion in cash and stock, a bold bet on securing the AI era. Management is talking about building an AI control tower, which is really about sitting in the middle of a company's data, workflows, and now security posture. Traders are treating this as confirmation that AI isn't just about GPUs and data centers. The picks and shovels in software and cyber are very much in play. Deals of this size can ripple across the entire cybersecurity complex, raising questions about valuations, who might be next on the M&A menu, and how large cap software reallocates capital in 2026. Zooming back out, that strong but fading growth narrative is still the backdrop. Jeffrey Bartash at MarketWatch reminds us the U.S. economy grew at a 430% clip in the third quarter, the best in 2 years, but "don't expect a repeat" is the key phrase. The long government shutdown and signs of cooling momentum into year-end have investors looking at this as a peak, not a new normal. That puts some question marks around cyclicals and adds a layer of caution to any everything rally scenario into the end of the year. On the policy and risk side, there's a fresh headline that matters for energy and ESG-focused funds. Victor Reklidis reports that President Trump has moved to pause offshore wind projects, with analysts warning that the halt could last weeks to months, even if it's challenged in court. For the offshore wind supply chain, turbine makers, vessel operators, specialized contractors, this kind of regulatory uncertainty is exactly the sort of theme professional investors handle with care. It introduces timeline risk and could push some capital back toward more conventional energy or onshore renewables, at least tactically. We've also got some high-profile, stock-specific stories percolating. William Gavin at MarketWatch notes that Tesla's EV sales continue to decline, even as the stock trades near record levels on hopes around robotaxis and autonomous services. That divergence, weakening current fundamentals versus blue sky future optionality, is textbook story stock territory. Bulls are focused on software-like margins from robotaxis. Skeptics are watching EV competition and execution risk. Either way, it's a good reminder to separate today's cash flows from tomorrow's narrative when you look at high multiple names. In the more defensive corner of the market, Tommy Kilgore highlights Kroger, which just boosted its buyback program, even as the shares flirt with their worst month in 3 years. When a consumer staple grocer leans harder into repurchases on weakness, it tends to catch the eye of value and dividend-focused investors. It doesn't guarantee a bottom, but it sends a signal about how management views intrinsic value relative to the current price. In the background, a few under-the-radar stories are worth keeping on your mental watch list. Charles Passy has a timely piece on that massive $1.7 billion Powerball jackpot, and why, after taxes and payout choices, a winner is nowhere near billionaire status. Beyond the headline, it's really a reminder of how taxes, fees, and structure can dramatically change what you actually keep. Concepts that matter just as much in investing as in lotteries. And Quentin Futrell's coverage of a survivor of the Allen Stanford Ponzi scheme is a powerful case study in risk, due diligence, and resilience. Stories like that tend to resurface whenever markets get frothy or when, too good to be true, offers start circulating. Professionals often use them as a mental checklist. Who's the custodian? How transparent are the statements? Does the promised return actually make sense? Into the next hour, I'll be watching how the tape digests that ServiceNow Armis deal across broader software and cybersecurity, whether offshore wind-related names see more pressure from the policy headlines, and if the growth versus story tension in names like Tesla bleeds into the wider EV and tech complex as we head toward the afternoon session and eventually the closing bell wrap. Remember, this is information and education, not personalized financial advice. As always, you'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.